Hi, Tim Biggam back this week, and this time for Delta Derivatives, which is a new initiative I'm starting that will provide some option-based and volatility-based trade research. So anyone interested in receiving any free research can email mark@rb-trader.com. That's what the option scanning tools that I use, basically to find my option hedges and edges, I call them, as far as putting on trades or hedging portfolios. So again, mark@rb-trader.com, and we can put you on the list there. But looking at this market, we are still range bound. We're still looking at 2080 to the upside on the S&Ps, 2040 to the downside. We did have earnings start yesterday, as always, with Alcoa leading off the earnings parade. And I think the theme from Alcoa really will be the theme going forward here for the overall earnings reporting season, which Alcoa missed on revenues but beat on earnings. They're not able to buy back stocks like many companies can, and certainly, the fact that a lot of these companies are buying them back with both hands has helped support earnings by reducing the, share count, to say the least. It's earnings per share, remember. So if they buy back shares, effectively you goose up your earnings per share by lowering your denominator. But Alcoa instead, because they are heavily in debt, did some one-time charges. So taking that out and using a GAAP accounting practice, which is the general accounting principles, Alcoa actually missed on earnings as well. So I think we'll see a lot of that going forward. Revenue certainly coming in shy. Price to sales on the S&P 500, basically the highest in history here. So remember that getting into this market, that you are buying a market that is the expensive it's ever been on a price to sales basis, but with interest rates virtually at zero. That's a yin and yang, and we'll see if the market can break out past that 28 to the upside. Certainly a market that is the Chinese market. Looking at the Shanghai and the Hang Seng are just on an absolute breakout tear to the upside. Hang Seng up 10% in 2 days. Looking at the FXI, which is traded here, which is the large cap Chinese ETF, and that index is up 16% since late March. So over the past 9 trading days, this thing has just been on a monster run. Up again today. I'm actually buying some May regular monthly puts, the 49s, at about $1.30, to position for what I deem to be a little too parabolic a move here. We always know how those things end, so I'm looking for a big down day somewhere along the way here. I won't jump in front, even though vows are up, and sell calls, simply because you don't know where the top is. But these puts are fairly attractive here, and I got plenty of weeklies to hedge off by selling front week against this longer position. So I have a defined risk trade here, and just really looking for a one-day pullback move, from 44 where it was to 51, pull back maybe towards that 48 level, and I'll take some profits in. So again, being more opportunistic, using those option scanners over at RB Trader rather than tactical. This market, the fundamentals and valuations matter less. It's more of a very short-term yin and yang traders kind of market. So using those option scanners really provides me with some nice hedge out there. So until next week, this is Tim Biggam, and as always, keep those stops in place and those trades going. Take care.